Like an Indian, say corporate goes to some other country and starts a company there. So India has nothing to do with that. That person is Indian, that is fine, but that company is not Indian. So we go by registration. Indian company means registered under Indian Companies Act. That is only Indian company. Now, once you understand this concept, then comparison between the four is very easy. For example, what I said, GDP, GNP, NDP and NNP. These are the four words. Gross domestic product, gross national product, net domestic product and net national product, right? Now, once you understand GDP, then now we will know other words through a process of comparison. For example, if you want to convert the GDP value into NDP, so just compare gross domestic product and net domestic product. So both are domestic products, so there is no difference at this point. But gross and net, one is gross, another is net. So the difference is here. So if you know what is the difference between gross and net, you can differentiate between GDP and NDP. And what is the difference between gross and net? Gross word is used for total, like gross income, gross turnover of a company. So gross means total. But when we say gross production in India, it means total production. But whenever we produce anything, we use plant and machinery, there is some depreciation in plant and machinery. And that depreciation is actually consumption of capital. It is also known as consumption because every machine has a life. Suppose there is a machine and its life is 20 years. So what we do, we practically consume the machine over a period of 20 years. So we produced, but we consumed. So what is net production? Total production minus depreciation is equal to net production. And that is what we say here. So what is the difference between GDP and NDP? Here just write minus depreciation. Right? So I hope you understand this thing, it is very simple. So whatever is the consumption of capital or depreciation in plant and machinery, you just deduct that part and you get net domestic product. Now whatever the relationship between GDP and NDP, same is the relationship between GNP and NNP. Because you compare, both are national products, but one is gross, another is net. So it is also minus depreciation. Okay. So you get two equations very easily. GDP minus depreciation is equal to NDP and GNP minus depreciation is equal to NNP. So that is the first difference. Now then we compare from left to right, GDP to GNP and NDP to NNP. Now you see where is the difference? Gross domestic product and gross national product. So both are gross values, there is no difference. But the difference now is that one is domestic and another is national. So you have to understand the difference between domestic and national. And I tell you the difference in very simple words. When we say domestic, it means production in a country, right? Or rather you may write it. Domestic means production in a country. And when we use the term national, national means production by nationals of a country. That is the difference, right? I repeat, GDP or domestic means production in a country. So if I say, what is India's GDP? So anything that is produced in India is India's GDP. And if I say, what is India's GNP? So production by Indians. So here national means Indian national. You see, it is so simple. National means Indian national. So production by Indians will give the value of national. But how to do that? We have the value of GDP. And in that, foreigners' contribution is also included. So in principle, what should we do? Deduct all that. But as foreigners and foreign companies are producing in India, Indians and Indian producers are producing in other countries. So if you are deducting this part, you should add that part also. So theoretically speaking, when we say, suppose you have to explain to somebody, then you have to say this much only. What we do, contribution of foreigners in our GDP will be deducted and contribution of Indians outside India will be added. This is in principle what we have to do. But practically there is one more problem. When the foreigners are staying in India, they are consuming also. They are not sending all this income to their home countries. Similarly, Indians working abroad, they are not sending all that income to India. So practically when this is calculated, we don't include or exclude all this income. We include and exclude only the part that actually inflows and outflows. And to say all this, whatever I explained, there is a term used in national income accounting, and that is what I am going to write here, plus NFIFA, and the full form is net factor income from abroad. Net factor income from abroad. So it means what? It means inflows minus outflows of income. The income that inflows means Indians are sending to India. That will add, added, and outflows means the income sent by foreigners to their home countries. So this inflow minus outflow is known as net factor income from abroad, and the same thing we can write here plus net factor income from abroad. Net factor income from abroad, because the difference is same, NDP and NNP, one is domestic, another is national. Now the right approach to deal with these issues is just focus on these four letters: gross and net, one difference; domestic and national, another difference, right? And I have an interesting question from Vishnu. What is the difference between NFIA and remittances? You say remittance word is used by sent by individuals only, but when I say NFIFA, it means all sort of, like Indian companies working abroad, they are earning profit, they are sending part of the profit, right? Or there are many other activities. Our embassy is working there and they are sending money back to India. So when we say NFI, FA, all type of inflow is included, while remittance word is used by the individuals working abroad. That is the difference, right? So NFI, FA is a broader term than remittance. And another difference is that NFI, FA word is used in national income accounting, and remittance word is used in balance of payments, right? So here we don't use the term remittance. They seem like the same, but they are not exactly the same, right? So you understand these things? So now coming to the questions, you see they don't ask questions very frequently from this part, but whenever they ask questions in pre, most of the questions they have asked in past 10 years, they are around these concepts only, whatever I have discussed. That GDP and what is the difference between GDP, GNP, NDP, NNP, or they will say that which of the following explains GDP perfectly. So you have to just focus on the definition and the difference. Now in the extreme case, what they can say that they will give you certain equations and you have to tell whether this is right or wrong, or they may ask you to fill in the blanks. So let us see how we can do that. But this is the diagram that I have created. Where is the problem? You know, in most of the books, even in NCERT, they have said the same thing, but in a complicated manner. I have simplified that for the class. That is the only difference. Because I know that explaining two things and two different simultaneously is very difficult, so I took these two differences one by one. Now, if you want to move from GDP to NNP, what will you do? You have two routes to follow. Either you follow this route or you follow this route, right? So outcome is the same. It will be plus NFI FA minus depreciation, or if you follow another route, it is minus depreciation plus NFI FA. But just remember one thing. I have used arrows here, right? And they are very important. When you move in the opposite direction, the difference will be there, but the sign will change. For example, gross minus depreciation is net, okay? But net plus depreciation is equal to gross. It is simple mathematics. So you have to just apply this simple mathematics. If you change the side, sign also changes. Don't miss this. So one more thing. Suppose there is no data available and the question is just conceptual. If GDP, NDP value is given, which value will be higher? Obviously GDP. Even if you don't know the exact number, it is a conceptual thing. Whenever you produce, there is some depreciation. It may be more or less, but there will be some depreciation. So gross value will be always more and net value will always be less. Suppose this, they are giving you 2-3 statements and you have to find out correct statement. So there these things will help you. But can we say that GDP will always be higher than GNP or GNP will always be higher than GDP? We can't say without knowing the numbers, because this is actual inflow and outflow and that changes year after year. So you can't say with surety without knowing the numbers whether your GDP is more or your GNP is more, but we can say it without knowing the numbers that net value is less than gross value, right? Now, what we have to learn now, so I have request to repeat. I am just saying that gross value is always more and net value is less because there is some depreciation. But we can't say the same for domestic and national, because domestic and national difference depends on net factor income from abroad, and that is actual inflow and actual outflow. So in one year inflow may be more, in another year outflow may be more. So we can't say without knowing the figures. That is what I have said. Now it is height, Sandeep Verma. After completing everything, you are asking what is depreciation. It means you joined late, or you were not listening. So in these circumstances, I can't help you, please, right? Because I want complete attention, because this is something a tricky topic, and if you miss something, and then it is very difficult to correlate. Okay, so yes. Yes, you see, I have a question from the class, and he is saying that if we borrow from abroad and we have to pay interest on that, you see, giving a loan and getting interest is an economic activity, right? So that is outflow. Who has given the loan? This is a service. So this is part of the services sector. Like you take a loan from a bank, it is a services sector. So this is an economic activity, and whoever is the earner of income, it will be added there, right? Whoever is the earner, it will be added there. Now just focus on one thing. I give you a simple equation and just try to complete it, okay? So say it is GNP is equal to NNP, and there is a blank space, fill in the blanks. Merit is asking, can GNP be greater than GDP? Definitely it can happen, but then inflow should be more than outflow, right? Both ways it is possible. So GNP is equal to NNP, and then there is a blank space, right? And how to do that, right? It is just a question of balancing. Many of you are from the science background, so we were balancing equations in chemistry, right? Just attempt the question with that mindset. We need balance. You see, on the one side it is net, another side it is gross. Now the balancing word is depreciation. That is for sure. But now the question is whether it should be plus or minus. That is equally important. And when you do that, always move from here to here, right? So when you move from gross to net, it is minus depreciation. But here, you see, you are moving from net to gross. So opposite direction means sign will change. So just remember like this, that the normal sign of depreciation is minus, but that will be gross to net. But when the direction is opposite, the sign will also change, so it will become plus. So it is plus depreciation, right? And I am getting correct answers from many of you. And here both are national, so already in balance, nothing required. So it is complete. Okay. So once you got it, now we can go for another equation. Say it is GNP is equal to NDP, and then there is and somebody is saying if D is 0, depreciation is 0. Is it possible? You drive your car and there is no depreciation. You use any machine and there is no depreciation. So don't ask hypothetical questions. Right? So now let us do it and just see whether your answer is correct or not. So net and gross both are there, so we will write depreciation here. But we are converting net to gross, so obviously it is plus depreciation. And then domestic and national, so net factor income from abroad, but domestic to national is always positive. Equation is complete. Right. Merit is asking that depreciation with positive sign, what does it mean? It means nothing. It is just an equation. Like if you say 6 plus 4 is equal to 10, so 6 is equal to 10 minus 4. It means nothing. It is just an equation. Take it as mathematics. And actually national income accounting is part of statistics. The problem is that most of the people, they take it as something else and they started thinking too much about this. Everything is fixed here. You cannot change this with argument. So there is no argument required. You have to understand it as a fact. And then your task is reduced. So I hope you got it. And as many questions we can compare, because it is just like a cycle, right? You just write two words randomly on the left side and right side, and so it will be fine. Now we know two differences up to this point. So the question now that we face is, out of the four, which is national income in India? Because there cannot be four national incomes. Which is national income in India officially? NNP. So if you know it, fine. Otherwise, write it in your notebook. So out of the four, NNP is used as national income in India. Yes, not understood the equations. I said that you have to just compare and find out the difference. So on the one side it is gross, another side it is net. So what is the difference? I have already discussed that it is depreciation. And then I said that you move from gross to net, it is minus depreciation. When you move in the opposite direction, it is plus depreciation. So that is the equation. So NNP is so this is one fact you have to remember. But you know, whenever you read anything, everywhere we are using GDP, not NNP. Why? It is just because GDP is the data that is always readily available. Practically, that is more useful. At the end of the year, we know the depreciation, we know the net factor income from abroad, then we can easily convert that into NNP. So officially it is NNP, but practically we are using GDP, like what is our saving rate, what is our investment rate, what is our fiscal deficit, what is our current account deficit. You see anything, any statistics related with the economy, everywhere we say as percentage of GDP, and that is because of the convenience, right? Data is readily available. Now, the issue here is, a very interesting question. Somebody has asked what is the difference between net income and net factor income. When I say NNP, it is net income. And when I say net factor income from abroad, that is net factor income. Though both things are, because just the word net is there, so you can't compare, because both are different things. Now, whether it is GDP or NNP, how to calculate it, because in the very beginning I said that we convert everything into monetary value, and for that we multiply by the price. So obviously the question is which price, because when the good is produced there is a price at the factory point, but when the good moves towards the consumer its price is changing and we pay a very different price. So which price? So in this context we have two words here. One is called factor cost, and another is called market price. So what is factor cost and what is market price? First let us talk about factor cost. Actually the word factor cost here is the short form of cost of factors of production. Right? Factor cost means cost of factors of production. Cost of factors of production. Now next question is, then what is factor of production? There may be many, but in economics we classify the factors of production into four. Right? If you have some background you may be knowing it. What are the four factors of production? Land, labor, capital, entrepreneur. Right? Now why land is word is used here? Land, actually you see the whole this whole subject developed during a period when the whole world larger part of the economic activity was farming or agriculture. That is why in economics everywhere you will get the words related with agriculture. So okay, when you read economics they use the word land, right? But now in the modern economics land should be interpreted as fixed capital. Right? Land should be interpreted as fixed capital. So what is fixed capital? Fixed means that cannot be changed. So here fixed capital means those things which cannot be changed in the short term. This short term is very important because in the long term everything is changeable. In the short term it cannot be changed. For example, land, building, plant, machinery, you cannot adjust the size according to your requirement. So these are called fixed capital. So in economics literature we call it land, but now in modern economics we interpret as fixed capital. And if you use the fixed capital of somebody else, you are not the owner of fixed capital, so what you pay is rent. So in economics we have theories of rent. Then another thing is labor. Now labor should be interpreted as variable capital. Variable capital means which can be changed according to the requirement. Now earlier labor was just a person who is working, but now labor in modern economics is variable capital, and it includes not only labor but also raw material, energy, transportation and other variable things. But obviously if we stick to labor, what we pay? Wages. So we have theories of wages. If you read the literature of Marx, Lenin, they have used all these words just to tell that capitalism is bad, right? So there is a lot of use of these words. Then third is capital. Now, here capital does not mean machinery. The context has changed. So, here capital means money. And when you borrow money, what you pay is interest. So, the third segment of economic theories is theories of interest. And the issue here is that in any economy, some people are having land, there are laborers, somebody else is having money. But till these three things are not integrated, they cannot produce anything. So, there is a third factor who is entrepreneur. He is the person who will integrate the three, and so the production will be possible. And whenever a person is doing this, he is taking a risk, right? And what is the reward for risk? It is profit. And so we have theories of profit. You know, this is the whole economics. The whole economics revolves around four words: rent, wages, interest, and profit. But I deliberately told all this to you because these are basic words. You should understand how to interpret these words. What is fixed capital? What is variable capital? But I also wanted you to know that when we say factors of production, these are the factors of production. And whatever we pay to these factors of production is factor cost, obviously. So, now you understand what is factor cost. Now, if you want to explain the same thing to a layman, then there is no need to do all this exercise. Then we can use the simplest word, and that is production cost. So, factor cost in simple terms is production cost. But what is the explanation required here? Production cost or factor cost also includes profit of the entrepreneur. Suppose a car is manufactured, there are some payments to factors of production. But the confusion is whether profit is included or not. So, answer is profit is included. So, the factory price that you say, this is the factory price. So, factory price includes profit because you cannot exclude entrepreneur. That is a very important factor of production. And if entrepreneur is the factor of production, obviously, the payment to the entrepreneur is part of the factor cost, right? Got it? And market price is simple. In India, we use the word MRP everywhere. So, market price is the price that the end user will pay. There is no explanation required there. But now we need to know right? Now we need to know how the difference is calculated or what is the difference exactly between factor cost and market price. What comes between the two? So, I give you an example, you will understand. Suppose there is a car manufacturer and he quotes the price that my factor cost is rupees 500,000, 5 lakhs. Now, this is the price at the factory gate. But now, when you purchase this car, do you get at this rate? No. Why? Because earlier there were many taxes imposed by the center or states. The good thing is that they have simplified that, integrated that. Suppose GST at the rate 18% is applicable on this car. It means now the price will increase by this amount, 90,000 is GST. So, what you pay is not 5 lakhs, you pay 5 lakh, 90,000, and this is market price. So, what is the difference between factor cost and market price? Somebody is saying that in rural areas, they generally charge extra 2 rupees on MRP for Pepsi because of cooling it. So, take it separately as service charge, that is not part of MRP, right. Another question is that if I have my own land, then rent will be included in the factor cost. Obviously, then you will pay rent to yourself. In accounting, this is how we do it. So, if you are the owner of the establishment and you are also owner of the land, then you will pay rent to yourself, but rent will always be paid. Now, you understand this? Now, what is this GST? It is a tax. Which tax? Direct or indirect? It is indirect tax, right? What is the difference between direct tax and indirect tax? Right? You see, there are two things to observe. One, who is liable to pay tax, means who is responsible to pay tax, and who is bearing the burden of the tax. If the two are on the same person, then it is a direct tax. For example, why income tax is a direct tax? Because if I am the income earner, it is my responsibility to pay tax to the government, and the burden of that money is also on me. So, burden and responsibility is on the same person, so it is direct tax. But why GST is indirect tax? When you took admission in ALS, you paid fee. Now, ALS is a service provided. It is providing service, and you are buying the service. This is our relationship according to the government. We are service providers and you are buyers of the service. Now, as the service provider, we are responsible to collect GST from you and deposit in the government account. If there is any failure, action will be against us, not against you. But the burden is not on us, burden is on you because you are paying GST. So, now in this case, the responsibility to pay tax and the burden of the tax is on different persons, or indirectly we can also say that the burden is shifted. So, when the burden is not shifted, it is direct, and when the burden is shifted, it is indirect. So, later on in taxation we can discuss this because this is a very broad issue, but here just because I use that word, so I explained a bit. So, what is GST? It is indirect tax. So, we can create an equation here, and what is that equation? Factor cost plus IT is equal to market price. Factor cost, IT here does not mean income tax, it is indirect tax, right. So, write at least once in bracket somewhere, otherwise later on somebody may misinterpret it. So, IT here means indirect tax. Somebody is saying that in indirect tax, burden in particular is on the SSC. Obviously, indirect tax burden is on the SSC, means the person who is responsible to pay tax is called SSC. So, factor cost plus IT is equal to market price. So, generally, right, generally market price will be more than the factor cost, because in most of the cases there is some tax imposed if it is not exempted, right. But there are other possibilities also. In some cases the government pays subsidy, like cooking gas. urea. These are big subsidy items. Right? So, if the government is paying subsidy, so let us say that, say the factor cost of a cylinder of cooking gas is say 800 rupees, but the government says that we will provide a subsidy of 200 rupees per cylinder. So, what we pay as consumer? We pay just 600. So, for us the market price is 600. So, if subsidy is paid, then the situation will be different. So, now the equation is factor cost minus subsidy is equal to market price. So, there are two possibilities. One where the tax is imposed, it is factor cost plus indirect tax is equal to market price. Another possibility where subsidy is paid, it is factor cost minus subsidy is equal to market price, means the market price will be less than factor cost. So, I have here written two possibilities in two forms, but ultimately when we are talking about economy as a whole, so we have to merge the two possibilities into one equation. And when we merge the two possibilities, we get the final equation, and the final equation is factor cost plus indirect tax minus subsidy is equal to market price. So, in the books you get this equation only, but I have derived this equation for you. How we get this equation? Now, once you know this, now you will never forget this. But one thing more that you have to remember is that sometimes this plus IT minus S is also written as plus NIT, and here NIT means net indirect tax. Now, it is not a big issue. Suppose the government this year gets rupees 10 lakh crore as indirect taxes, and out of that it pays 2 lakh rupees as subsidy. So, whether you write plus 10 minus 2 or you directly say 8, it hardly matters. But in equations we have to be careful, because if they say plus NIT, it means subsidy is adjusted. So, if they say plus NIT minus S, then it is a wrong equation, because NIT means subsidy is involved there in NIT. So, you cannot write it again. So, from equation point of view it is important, otherwise it is not so important. So, I hope you understand this thing. So, this is the third difference, factor cost plus IT minus S is equal to market price. Now, I have a question that in case of cylinder, where is GST? GST is also there. Now, final equation what I have said, plus IT minus S. So, whatever the tax that will be imposed, it will be plus, and whatever subsidy that will be deducted, and you pay the whatever the difference, right. One question is, what about petroleum? Petroleum is a very tricky issue, and it can be discussed in the taxation only, because to discuss petroleum you should know so many other things, then only you are in a position to comment on this, right. What are the types of taxes, how the taxes are collected, what are the rules involved, what are the compulsions as far as central and state government, which government is imposing how much tax. Once you know every fact, and then only you are in a position to comment, right. If you have to comment on the Facebook, that is the easiest, because there is no responsibility there. That is open platform, but for UPSC you have to be responsible. So, and I tell you frankly that till you are preparing for UPSC, it will be very good if you close all your accounts for 1 year. I am saying it very seriously. because this is the worst thing to do, playing with these platforms, getting fake news on a daily basis, getting absurd opinions on a daily basis. That is only disturbing you, confusing you, right? And UPSC syllabus is something else. Why you are getting involved into these things? So that is my sincere advice. You stay away from all these Facebook, Instagram, and yes, small WhatsApp groups can be created between your friends where you can discuss the issues. That will be very good, but not beyond that. Okay? And if you do that for 3 months, I tell you, you will feel the difference. So now on the basis of all this, can we create more equations? Yes, because now we have 3 differences. So more possibilities are there. Let me write one equation. NDP market price is equal to GNP factor cost, and there is a blank space. I got a response that I don't have any social media account till now. That is very good. So you just continue with this status for another 1 year. It. Now I am just solving it. You compare. Okay. So gross to net, it is minus depreciation. National to domestic, it is minus net factor income from. Why it is minus? Because the direction is opposite. Then factor cost to market price plus IT minus S. How simple it is. But this will be simple only if you follow my method. Otherwise, it is too complicated. And it is difficult, it will be very difficult if you apply too much mind into this. Don't ask why, because when you enter into why, then complications start. Take it as a mathematics sum, right? Okay, fine. And this thing can be written as plus NIT also. But if you change the place of these two, suppose this becomes factor cost and this becomes market price, then this whole thing will change. So it will become minus IT plus S, right? Sign of both will change, or it will be minus NIT. You see, just focus on one thing, indirect tax or subsidy, whatever you like. The sign of other will be always opposite. And it is because of they cannot be the same in any circumstance. You know why? Because by nature their direction is opposite. Indirect taxes we pay and the government receives. Subsidy the government pays and we receive. So in no situation both can be positive or both can be negative. So if you just focus on just one, another you get by default. Okay. So these are extreme cases. I am telling to you that these are the extreme, very difficult questions which you can solve very easily. So third difference. Now whatever we have, then we get a fourth challenge or fourth difference. Whenever you read all this data, you know, in brackets they often write at constant price or at current price. What is this? At constant price and at current price. So let me explain the concept first and then I'll use the equation. Suppose there is a farmer in India, and in 2011-12, I am using 2011-12 because that is the base year in India, right? So, a farmer produced 10 quintals of wheat, and that year the price was 1000 rupees per quintal. So, we can say his contribution was 10,000 rupees in national income, because everybody is contributing to GDP, right? Now, 2020-21, this year, this production was 12 quintals, but the price now increased to 1500 rupees per quintal. So, what is his contribution? 18,000. Now, the question here is that this increase from 10,000 to 18,000 is because of two factors. What are these two? One, increase in quantity, and another, increase in price. And if we want to know increase in production only, because price is not increase in output. If we want to calculate increase in output only, so what we should do? We should take price as constant in our calculations. So, if we do that, it can be written as 12 quintals into the constant price, means the same price that was in 2011-12 is equal to 12,000. Now, the government will provide you both the data, but when they provide you this 18,000, they will say it is at current price and this is at constant price. So, this is the meaning of the words. So, when we say at current price, it means the price of the current year for which the data is being calculated. But when we say at constant price, it means the price of the base year. So, constant means price of the base year, whatever it is, because whenever we calculate the values, we calculate the values from a base year, and as at present our base year is 11-12, so that is why I am using that, so that it will strike your mind if you are confused that yes, in our example it was 11-12, so this is the correct base year, right. Now, this is the model or a simple example that I use to explain the concept current and constant. But you see, when we actually do that, it is practically not possible to do this type of calculation separately for thousands of goods that we produce in India. So, that is why for national income accounting, when the CSO will be doing it, they will use a formula for it, right. So, now this was the example, now I am going to give you the formula. So, note down the formula, it is national income at constant prices, or you can also call it national income, or rather real national income. And I already used that word real, and real means adjusted for inflation. So, at constant prices, this is also to be remembered, at constant prices means real, because now we are focusing on production and we are ignoring the price. So, it is equal to national income at current prices divided by price index multiplied by 100. This is the formula. Now the question is how this formula works. You see, what is price index? You have to understand first this word price index. Price index is a number that tells us about average change in prices. This is the simplest definition. Price index is a number that tells us about average change in prices. And how it is calculated later on when I discuss inflation, WPI, etc., there I will discuss it in detail, but here I will just give you a small concept. You see, suppose there is a good and its price is 50 rupees and after some time it increases to 55 rupees. Now there are three ways to say this. One, in absolute terms you can say that price increased by 5 rupees. Another way to say it in percentage and say that price increased by 10%. But when the same thing you want to convey in price index form, so the rule in price index is that it starts with 100, not 0. So 100 means no change. And whatever the percentage change, that is added to this 100. So if the price increased by 10%, so we can say that the price index is 110. If the price decreased by 10%, so it will be 90. So anything less than 100 means decrease in price and anything more than 100 means increase in price. This is how we interpret it. But obviously, if it is only one item, nobody will use price index, then it is not useful. We can say directly 10% is the price rise. So it is useful if there are multiple items and we want to know what is the average change. So price index is used for averaging. Say there is one item where the price index is 110, another 20%, third 30%, and you want to know what is the average change in price in these three items. And if the price index is 20, then you can easily say that the average change in is 20%, though individually the changes are different. So price index is used to know how much is the average change in price, right? You got it this point? Now, this 100, if I shift from here to here, it can be written as price index upon 100. And this thing, price index upon 100, gives us the information in which ratio price has increased. Because 100 is the base year value, and price index is the current value. So in what ratio the price has increased? So this is called inflation factor. Right? So inflation factor is price index upon 100. And once we know that the price increased in this ratio and we have the value at current prices and we divide it by this, we'll get the value at constant prices. And how it works, I can show you that this 1000 rupee is the price, so initial value of the index is 100. When it becomes 1500, it is 150. Yes, Amrish, we take 100 as the base for price index always. Now the 18,000 was the current value. So if I put all the values here, you know what you get? 18,000 divided by price index is 150 into 100, you get 12,000. Same value you get. So this is how the formula works. But you need not worry about the formula. I use this formula just to tell you about this word that is called inflation factor. Because when you read the data like CSO report, so they will be using these words. Inflation factor means this is inflation factor. So I wanted to tell you the term inflation factor but I took this long route. So now all the concepts are clear to you. Now inflation factor is this term, but what is the purpose of it? We are reducing the value. At constant prices, the value is more. At current prices, the value is more. We want to convert it at constant prices, means we are trying to reduce the value. So it is very interesting that its name is inflation factor, but when we apply it here, it works as a deflator. So it is inflation factor, but when applied here, its function is of a deflator, because it is reducing the value. And in what proportion it is reducing value? In the same proportion the price increased. And how much is the price increase? That we know from price index. That's all, right? So this is the concept. And now if you remember these four differences, I tell you, any data by CSO you can easily understand and analyze, right? Pranay, you are saying, could you please repeat the calculation? Calculation is very simple, because national income at current prices means 18,000 is this value at current prices. Then current price index is this 150, this is price index, multiplied by 100, this is 100, so you get the same value. I just wanted to show you that whether you do it manually or you use the formula, you reach the same result. But CSO obviously will not be doing like this, they will be doing like this only, right? So that's all for today, because my time is over. They will be waiting there for activity, right? So it is not yet complete, but the larger part of this concept I have covered. Few more concepts are there. So tomorrow I will be discussing those concepts, and I'll complete this topic, and then I'll start a new topic also, and that will be poverty and unemployment. So it will be good if you read that, right? That is a small chapter in your NCERT book. You can go through this booklet also, right? And tomorrow I will discuss all this. Thank you.
Okay, done. So question number 1 holds because growth is quantitative and development is qualitative. Okay. Question number 2, social and economic. Okay, economic. Question number 3 holds why? Because development is wider and comprehensive concept than growth. Okay. Question number 4, true. Question number 5, yes, it's PQLI. That is physical quality of life index. 6, life expectancy and literacy and infant mortality rate. Okay. Life expectancy, literacy and infant mortality rate. Question number 7, true. 8, it's infant mortality rate, IMR. Question number 9, 7 years or above. 7 years or above. Okay. Question number 10, life expectancy at birth and level of education and per capita income. Okay. Question number 11, it's true. Question number 12, false. Why? That is exchange rate adjusted to triple P. Okay. Purchasing power parity. Question number 13, that is triple P, purchasing power parity. Question number 14, like I'll tell you, it's better. Sustained growth, structural change of economy and a change of occupational structure. Okay. You're getting the answer keys, right? Hope you're getting that. Okay, sustained growth, structural change of economy and change of occupational structure. Okay. Question number 15, poverty, unemployment, then inequality. Okay. Poverty, inequality and unemployment. Okay. I think Priyanshu, it is what is 10 means? Question number 10, I guess. I will repeat it. Question, just a minute. Question number 10, it is life expectancy at birth, levels of education and per capita income. Okay. Hope you got it. Question number 16, it's COR, capital output ratio, COR. Okay. Question number 17, false. Why it is false? It's ICOR. Okay. You know that, na? The full form. Question number 18. Question number 18 is true. Question number 19, false. Question number 19 is false. Then question number 20. Question number 20 is true. 21. 21 is true. 22. True. 23. C. 24. 24 is D. 25. 25 is D. 26. C. 27. 27 D. Yeah. 28. 28 is B. 29. 29 is B. Question number 30. Which of the following was not included in PQLI, right? Yeah, just a minute. Yes. It is C only, okay. Yeah, it is C only. Question number 29 is C because PQL is there. So answer is C. Question number 30, it is A. Okay. Okay, so let's wind up. Centers or app, do you have any doubt you can ask? Otherwise, let's wind up. Okay, so let's wind up.